Hello traders and welcome to today's lesson. Today we are going to be talking about areas of support and resistance in a chart. Support and resistance plays a vital role in any currency, bit stock, indices, binary or forex itself. So what are the areas of support and resistance and what are the psychology behind it? When you ask some traders what are your trading strategy, they will tell you that their trading strategy is support and resistance. So why is it that this support and resistance is so much important when it comes to uh, deciding entries and exits in a chart? First of all, we are going to be identifying or getting the definitions or understanding the definition of the concept support and resistance. Here I have some write up just to, should in case you want to write down anything. Resistance is the point at which the supply is robust enough to prevent the stock from rising any higher. In the virtual representation provided, it is evident that whenever the price approaches the resistance level, it encounters difficulty suppressing that point. The underlying logic is that as the price rises and near resistance, sellers or supply becomes more inclined to sell, while buyers or demand becomes less willing to buy. Let's quickly, before we go further, let me illustrate what this implies in our rough sketch here. Now, we have, let's say here is our area of resistance and this is our area of support. When price starts from, let's say it starts from lower point like this, come down, pretty high, come down. When price approaches resistance, sellers are so much interested at this zone. Mind you, support and resistance are not just a single line on a chart, they are areas on a chart. So what you notice is that price will be finding it difficult to penetrate above this area. Mind you, it is not immediately price get there, sellers are willing to start taking order for sale. No, there are certain reactions that prompt it at first before they decide to follow that next time when price gets to such level. So when price get there at first, what you notice is that price will drop like this. So on it coming back, you will discover that our, what is it called, our indicator which we use for our POI, we highlight a BOS here. That means you see this area as our BOS. What you see next is it will highlight the top and the last bearish candle and the last bullish candle. So when price is now coming into that zone next time, this is when sellers are now so much interested because they believe when price approach it again, it's going to what? Push down. But this is not usually this doesn't happen every time. But today, for us to understand what resistance is, these are areas where price gets to but finding it difficult to what push above. So that area becomes a very uh interesting area for those who want to sell or who want to take a sell order. That is why when we also find that price comes to this zone, we are so much interested because we want to see the reaction in a lower time frame. Let's say this is H1. Let's say this is H1 time frame. That means the 1 hour time frame. H1. So we now we'll be looking for reaction on M5 of M15. M5, I have my what is in here. Let me even. So we'll be waiting for reaction in M5. That means 5 minutes or 15 minutes. See if price is giving us a move towards the downside. Because when price get to this zone, they believe that there are still orders left here. What next you see is they want to sell and take their profit at this extreme low. But as we all know that these things is not usually as easy as it is on this chart now, because we might draw it and you might understand it here, but when you now dive into the live chart or live market, you might be finding some things very difficult. But I told you that whenever your 15 minutes or 5 minutes is contradicting the signal in your 1 hour POI, you should do what? Ignore such. Wait for it. Let price move outside that zone and see if it creates another POI. Then wait, let it mitigate it and go to your 5 minutes or 15 minutes to check the scenario. At that point, you might discover a good entry. In a nutshell, resistance zone, this is areas where the sellers are much interested. Buyers will never take their order here. No, they won't try that. They will only wait for price to come to the lower part, move up, and when you give them BOS, when price is approaching the zone in which is the support zone, that is only when they will take their buy. So that is why I always keep emphasizing on your POI that always observe the areas of your POI in the higher time frame. Make sure it is close to a resistance because you have other indicators which are plotting out resistance and support. When price get to that zone and it is also at your area of interest, that is good. That is number one. That doesn't give you a quick guarantee to place a sell order just because price has approached or entered your area of interest for sale on 1 hour. No. What will give you the full assurance that this price is ready to move down is the reaction of price in your lower time frame, because sometimes price may be giving you price may approach your sell zone in your higher time frame, but in your lower time frame all you keep seeing is price still giving you higher high, and it has not given you a break of structure indicating price wants to move down. So in such situation, don't trade. That is why I said trading requires patience until you have 2-3 confirmation before you take your order. If you confirm that price is at a resistance zone in your higher time frame, good. It is also at your area of interest, fine. But when you come to your lower time frame to see if eventually you have similar confluence or similar movement, but all you notice is you don't even see area of break of structure towards the downside, all you can see is BOS towards the upside, then at that moment price is not the movement of price is not aligning, so you don't move it. It's just like saying uh I'm just giving a scenario. Mr. A is standing here, eh? And Mr. B is here. Sorry, Mr. B is a little bit headed. Can you see? They they want to they are on a mission. Both of them on a mission. Mr. A is facing here and Mr. B is facing the other side. Will that mission be possible? No. So, except either Mr. A and B face this direction or Mr. A and B face this direction. That is when they will accomplish the mission. But if one person is facing here and the other person is facing the other side, it means the mission will not be accomplished. That is what happens when you are told to always wait for confirmation in lower time frame to indicate that uh, the movement is towards the same direction. It is towards the same direction. That is when you take your entry. Now, in trading, you don't really rely on one particular conference. Sometimes in your higher time frame, it might not give you the same conference, but later on, you start discovering that maybe when price shoot out of your higher time frame because it was not aligning to what your lower time frame is doing. But mind you, whatever be the case, it is the higher time frame that usually win. If it is not aligning, it means you shift one step ahead to the next higher time frame. If it is not aligning in if you see that movement is not aligning, the next thing you can do is to go to your H4 and see what is happening. What makes your H1 not to drop from the area of interest might be as a result of your H4 is moving upward. So the only time H4 and H1 will align is when H4 is trying to retrace back. That is when you start noticing that your H1 is coming down, your H4 is also coming down, then your M5 and M15 will now be able to give you that area of interest towards the downside. So 5 minutes is usually smart because I tell you that if your 5 minutes and your 15 minutes is not aligning to what your H1 is doing, it shows that something is fishy. You can just take a step ahead to the next higher time frame and see. Definitely you must get know how. You must just see the reason why it was not aligning. So in such case, what you do is wait for it to align before you take your order. Why we most of the time we lose trade or we is either we are too eager to enter early, taking the wrong step, not waiting for 1, 2, 3 confirmation, or we just don't understand what price is doing. So please, whenever you notice such move, when your H1 is at the resistance zone, there's the resistance line ahead, and what you're expecting is price to push towards the downside because it has given you a BOS in your H4 or H1. It has given you a BOS for a downside and it has created area of interest. Price has entered or get into that area of interest, and what we want to see in the lower time frame is similar scenario that price is ready to move now. But when we get to the lower time frame, all we just get is price creating higher high. No anywhere we found BOS towards the direction and downside. Just move a step ahead to the next time frame and check what is happening. And when you can find it, when you're able to figure it out, it's good. If you figure that maybe the price is not at that zone, maybe your H4 time frame, right? This is the area for entry for 1 hour. But price then at the head, when you go to a higher time frame, you see that price is still approaching to its own area of interest. So it means that if price didn't retrace back, definitely you wait for it to get to that of H4. Then when you get to H4, you'll be looking for a similar situation in H1 before you go to 5 minutes and 15 minutes to take entry. If you are patient, you only lose the 2% compared to losing all or losing more. So please, so as we were saying that area of resistance are points where price get to and they couldn't push further. Rather, what you see is price on the downside. And when immediately create a BOS for us who are trading the chart, that is when we know that yes, indeed, when it goes back to that zone, all we are looking for, because it's an area of interest, we are looking for similar situation in our lower time frame before we execute any order. So now I believe you understand what the resistance zone is. It's not immediately price hit here that sellers take it, no, because what we confirm that price is at the resistance zone is going to break a structure for you. It's going to configure this higher high, it's going to change it. What you see now is a BOS towards the downside. If it doesn't give you a break of structure, then definitely it's still on the higher side. So it will not even highlight the area of interest in your time in your chart. So until it is approved before you decide. If it doesn't come true, you keep holding till when it gets to that zone or it gives you the necessary move. So let's go back to our write up. So we've discussed, and when you see the charts, the virtual charts here, you can see what price is doing that. Immediately get to the resistance zone at first. At first, this is not a resistance zone. You see, at first it came down. Immediately get there the second time. This is where sellers are interested. This is the point. That is where they will start pushing a sell order, making there a very valid point. Then when they push the order, they will take out their profit at this end. This is, I've been saying this all through, it's just going through those videos and digesting the information, because if you don't digest it, might just make a simple error on your chart or trading, then you come back and start lamenting that you don't understand. Take your time to digest the information, go to charts, look for similar scenarios. If it's not occurring, wait for it to come up. Then support is the point at which demand is potent enough to prevent the stock from declining further. In virtual representation above, you can observe that whenever the price reaches the support level, it encounters challenges moving lower. The underlying logic is that as the price drops and approaches support, buyers or the demand zone become more inclined to buy, while sellers becomes less willing to sell. Yes, you can't be taking sell order towards this zone. If you know initially you noticed it that at immediately price got here, this was where price got to and it was moving upward. So you'll be foolish as a seller or as a trader when you can identify areas where price was rejected initially, price gets to that place and started placing another. Definitely you are a joker. This is the mistake some of us do in trading because price got here, they want to start breaking sell. If you place sell, do you see how many losses you make? Some of you your equity might not even cover. It just blow you out of the market and you start complaining that there's a broker somewhere manipulating. So sellers don't, when price is approaching this zone, sellers lost interest. The only people who are interested are buyers. These are where buyers, okay, we are interested, let's take more, let's keep buying. And when they buy, you see it, they'll push price up. At first, this is where price is. It went up. Immediately it came back and they notice it, they buy. This is it. So this is just similar things. Your indicator is already there to give you guides on all these things. It's just you be patient and wait for a confluence. That means a connecting move between the 3 time frame you're using, 1 hour 15 minutes and then 5 minutes. So now understanding the emotions the emotions or logic, psychology, the emotions or psychology behind support and resistance in the stock market. Let's break down the psychology of support and resistance by looking at how different people in the market behave. Imagine some buyers who regularly buy a stock when it is around $50. When the price is around $50, that is when they will want to buy, which is their support level. They buy it at $50 and when it goes up to $55, they are happy. However, they prefer to buy more at $50 rather than at $55. If the price goes back down to $50, they plan to buy more, creating demand at that level. When you come to, let's do some, let me explain what that point is trying to say. Now, like we have it initially, our resistance, our support. Remember that before we look for a buy listing, what is it called? A buy opportunity. We want to see price do something like this. Drop down, move up, breaking the structure, right? All the way up. Immediately break structure, our software will highlight this area as our area of what? Interest. At first, maybe this level it is now, price is $50 here. That is the first people's behavior. Price is at $50, and they notice that immediately move up to this level, it reached up to $55. It made five RDB they had bought here, they will have made $55 before the price come back. So they will now be so much eager to see price come back to this zone again. Immediately price comes here, they will start pushing a buy order because they already know that this point it got to. If they had taken their buy here, they would have made $55. They have $50, but after they invested that $50, they will have made $5 at this point. So they will push in and take orders from this level because that zone become area of interest, and they will hold it up to that zone where they saw it get to initially. So this is what that aspect is explaining, that they will wait for price to come down again. Just like I do tell you that when you notice this in your higher time frame, you wait for price to approach that zone, then you go to a lower time frame. When your lower time frame is aligned with what your higher time frame is doing, it means there's high probability that price will go. If it doesn't align, see where your stop loss will be. Somewhere this is the swing low. So if price should break that place and come down, you only lose little ration of your equity. Then you wait for the next move. Definitely someday, sometime, everything will align for you to make huge profit or to recover the loss you made at this very particular trade of entry. That's why I told you, one, don't open too much position. Then secondly, always wait for price to give you confluence. That means let what 1 minute, 5 minutes, and 15 minutes is 1 hour, 5 minutes, and 15 minutes is doing, and in the similar direction. So this is what that part was explaining, that they will be interested at first. Price got here, it gave them the BOS, and it got to if they had invested $50 at this point, they would have made $55, made $5 extra, making $55. So since the notice price gave that move, they wait for price to drop to that zone next time before they execute multiple orders, or execute their order. Now this place now becomes what we call the demand zone. It now becomes the demand. For upside, it becomes supply zone. When they take their sell at that zone, it now becomes supply. Then at this point, it becomes demand. So that is what that very point was explaining, or that very aspect was explaining to us. So let's continue with our chart. Then number two, he said, now let's think about another group who thought about buying the stock at $50, but they didn't buy it because price has not given them the direction. When the stock reaches $55, they regret not buying earlier, right? Maybe the first people that bought at the early, maybe they are very smart, they have confirmations put together to give them that quick entry. But these people, they don't have that confirmation, so they are in the group of people waiting for price to come to that zone next time. So now think about, okay, imagine some buyers who regularly, we're in second one. Now think about another group who thought about buying the stock at $50, but didn't. When the stock reaches $55, they regret not buying earlier. They decide that if it drops back to $50, they won't miss the opportunity this time and will buy, creating potential demand. So that is just what I explained, that since they notice that this thing move and got to this point, they know the area already where it gets to. So they'll be interested that when price come back to that zone, they will be interested in taking their own order. Now the third group bought the stock at a lower price, like $40. When it reached $50, they sold. You see why? They quickly exited the market. They exit the market. Seeing it go up to $55, they now notice that this price went even above. Sorry, this one should be $50, not 40. It should be a third party stock lower price. I think there's a typing error there. Like $50 when it reached $55, they sold. Okay, it's correct. They won't they want to buy it back at what? At $50. That means when it start drop when price get to $50 now, they want to take orders to correct their mistake, adding to the demand. Yes. So when price maybe depreciate a little bit to level of 50, they will place more order and push it up again. So these are areas of where people pick interest on, and that areas always act as support and resistance. Switching to resistance, imagine everyone owning the stock at $50. When it goes up to $55 and then comes back down to $50, there might be regrets for not selling at $55 as it goes back to as it go back to $55. People sell as much as they can. The collective selling at $55 creates a resistance zone. Let me explain what this one is saying, because this one is talking about the people at the resistance zone, characters that portray at a resistance zone. Now, price broke down, creating what? BOS. So this usually break structure, this become our area of interest. Now, they have $50. ADB they had sold at $50. It went as far as dropping $55 to this level, right? Now, they refused to sell. Then the thing started going back. It reversed back to this level. It reversed back to $50. So immediately it gets back. You see them once price got back to this level, they will start pushing their sell again. That is when I told you that is why I said this area become area of interest. They now push more sales, making here a supply zone. Why prices are reacting. But in a normal trading, we don't just do it because it's like this. So we do it based on what our lower time frame is giving us. If the information our 1 hour is giving us align with that of our 5 minutes and 1 hour for 15 minutes, that is when we do it. Because saying it like this looks very easy, but when you go to your chart, you start finding some things are coming in play, some other factors coming in place, and those factors can be as a result of maybe um, liquidity from other higher time frame. But I told you earlier on that whenever this scenario comes up and your 5 minutes is not aligning with it, don't do anything. You won't lose your money will not run. Always wait for a condition where three of them 15 minutes, sorry, 1 hour, 15 minutes or 5 minutes align. So if they are not aligning, then it becomes a big problem. It becomes a very big problem, because if they align, the movement uh will be very okay. But if they don't align, that is when you start seeing issues in your chart or in your trades that I pick. So one more thing, if this is your higher time frame, if this is your higher time frame, when price is approaching here, if you're using 1 hour, let that candle that enters into this point drop. Immediately the candle drop, it gives you an insight what to do next. So if price should break above here, it shows that something is fishy. What you just do is go to your higher time frame, which is 4 hour, because after 1 hour, the next one is 4 hour, to see the scenario. But nevertheless, if it's going to be that way, 5 minutes will never align with your other um other your 5 minutes and 15 minutes will not align. You just see that it's contradicting. So please always wait to see that everything aligns before you place trade. Otherwise, you'll just be losing your money to those brokers. So I think This example shows different situation, and if you have traded before, you will have likely felt similar emotions because that is what we are doing. We always wait for price to get to our area of interest before we execute any trade. If price doesn't get there, we don't trade at all. We don't do that. So many other traders go through the same feelings, shaping the market psychology around support and resistance and technical analysis in general. And one more thing I want to bring to your notice regarding this is when you go back to the previous lesson where I talked about tradable order block, we said one, order blocks should be positioned at or near support or resistance level. So if you are going to do all this, you still need to check where it is. If your other block is not at this region, there's probability that it won't work. But nevertheless, your 5 minutes will always give you that information very fast. Yes, because your 4 hour may be at area of interest. Let's put it, your 4 hours may be at area of interest like this. You have BOS, right? This is our area of interest. Then the next thing, when price come here, we want to shoot and execute our trade at this point, right? Fine. But when you go to your 5 minutes, you see your 5 minutes doing this. 5 minutes will be giving you high. You will not see a BOS for downside. So immediately you notice this in your 5 minutes or 15 minutes, it is telling you that something is fishy. And the only thing is either you wait for the candle to drop or go to 4 hours and see what is happening. Because if it is not like this, definitely your 4 hours is going to push off from this block. It is possible it might retrace back before it start giving you this move in your lower time frame. And if it even push out, your 4 hours will tell you it might be that your 4 hour is making a retracement back to maybe the level 50 or level 61 of your Fibonacci before it start dropping. So in any situation it is, your 5 minutes will be the first to give you info that yes, indeed, there is also BOS for down move. So it is waiting for 1 hour to mitigate so that the both start moving now. But if you see situation whereby they are not giving you the same thing, it is not a must. Leave that particular pair and look for a pair that's giving you what you want and what you want to see. So I think that is that. This brings this class to an end. The next class we are going to be talking more on other areas, how to take normal trades, and I'm going to be giving you. Sorry, I'm going to be talking on volatility 75. All the volatility is not even only volatility 75 because those ones seems to go extreme. Yes, even if they are going to go toward the direction as the area of demand and the areas they do go extremely based on where the institutional candle is. The volatility, all the volatility pair always covered. They always make sure they cover imbalance before they go to the Roman direction. They too used to have issues like this where 4 hours will give you the right. Sorry, 1 hour will give you area of interest. 5 minutes will not give you. It also happened there, but in general, they have one particular thing they do that if you are new to it, you might lose your money before you even make profit. You might lose some part of your money. Your money might be running into some losses before it eventually goes back to profit. So in the next class, I'm going to tell you what you should consider before taking a trade on the volatility indices. So, all right. See you in the next class, guys.